All right, traders, happy Friday, happy weekend. This is Christian from Tribeca Trade Group, and this is your end of day and end of week video. So we're going to go over the weekly performance first. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendation. This video is for education purposes only. If the video looks a little bit blurry to you, it's just because YouTube has not finished rendering the high def video. So give it some time, and it'll be rendered properly. But I send this thing out whenever YouTube sends it's ready, regardless of whether it's high def or not. Okay, so I mentioned I would get to the week's performance first. I mean, you know, I would say kind of a crazy week, and we'll go over some of the performance. But what's particularly crazy about this week is the top line. You could see the performance for the week. S&P was up 1.4%. What do you see in common here? If you go one by one, just about everything was up over 1%, between 1% and 2%, and that includes international, right? That includes EEM and EFA, which is international developed markets. Bonds and gold were also up a little bit over 1%. So, if you're okay, basically, having a diverse portfolio, like in your 401k or your IRA, and you have a little bit of gold, a little bit of bonds, a little bit of international, and of course some domestic stuff, you did okay this week, and there wasn't too much difference if that's what your approach is. But I don't know. I'm not sure if I've ever seen that before. There's always things that surprise me in the market. I've been doing this for a long time. Overall, more than 20 years, I would say. I was an institutional trader, obviously first. Well, not first. I started off my career as a financial advisor, and then I went to institutional trading for a long time, and I've been a retail trader now for about a little bit over five years, I guess. So there's a lot of there's a lot of things that I've done, and I always get surprised when because I feel like, hey, I've been doing this for such a while, that this market still surprises me with different things, and I still find things that are different. Sometimes week to week. Sometimes it's last year was a crazy year, and this year too is extremely interesting too. But yeah, I don't know if I ever remember everything being exactly up 1 to 2% in terms of those macro things. I also added what basically large cap growth and value did. They were also up both over 1% for the week. All right. Well, when we break this down by sectors, it's not exactly that clean cut. There was some divergences there. Remember last week, the best performing sector was technology. And this week it was a return to a lot of material things, right? Metals and mining, steel, they were both up 4%. Of course, there is some overlap in there, but when you throw in the gold miners, just kind of interesting, I think, regarding the gold miners, because it's been one area that really has really not done that much, and gold hasn't really been trending this year, and it kind of just felt like, hey, everything else has been it's been, we saw one day where healthcare really outperformed. We saw another day where, the materials really outperformed. We've seen retail out, so it's been kind of day to day where a different group really kind of takes the ball and runs with it. And yeah, you could see the materials were up 3.3%. The utilities kind of right in the middle of that, the best performers up 3.7% for the utilities. I mean, that's a big week for utilities, right? And healthcare was up 3% for the week. Tech still did fine, and consumer discretionary, two of your bigger areas of the S&P. Tech was up, added another 1% after last week's big gains. And today it was the home builders were very strong today, so up 2.4%. What didn't perform very well? Well, it seems really like I've been calling them kind of super high growth areas of the market, which have been down, but I'm not sure if that's the right term for that. I would say very, major speculative areas. Clean energy was down 6.75%. That's really been lagging over the last few weeks. There was a little bit of some call buying yesterday as well as today in a different ETF, not PBW, but ICLN. There's some out of the money call buying, it appears, for the month of May. So someone's looking for maybe this to kind of at least bounce. And I think that's, we talked about this in the trading room earlier, that, some of these things we have seen different areas of the market that have been underperforming bounce, obviously, from time to time. So it looks like somebody's playing for a bounce, not particularly, I don't think, a trend change, from what we've seen recently, but a bounce they're looking for. Again, may just be one particular buyer who's looking for that. And again, that's ICLN, International Clean Energy. Blockchain cryptos, that got a lot of the story earlier in the week with the Coinbase ETF. Again, very much seems to me, and this is how it works a lot of the time in the trading world: buy the rumor, sell the news. It seemed like some of these things, even the cryptos themselves, rallied into the Coinbase listing, which made really no sense to me, other than made no sense to me, other than, I get it. There was, a lot of expectations for that, and then they sold off like it normally works, right? Once the news comes out. The pot stocks, they really haven't been any place to be, in this year. They're down another 5.5%. The Chinese internet names, no bounce in that group so far, but probably due for one, down 1.5%. The semis, since they had really good performance a couple weeks ago, have kind of gone quiet. I think they are setting up nicely for a move next week, but we'll see. We'll talk more about that in the member video this weekend. And oil and gas names, they had one day this week where they rallied, but overall they were down for the week, and so was solar as well. All right, so that's in a nutshell. That is your sector performance. International performance, interesting. Russia up 5.3%. Take a look at some of these charts. Now, I didn't look at, but I don't go over the international charts individually, like country specific, certainly every day, but I do look at them at least once a week. Here's what RSX looks like. Right, it doesn't look bad. The Russia ETF. I'll tell you what looks particularly attractive, and I talked about this in. We talked about this in the trading room, and I also sent this out on Twitter earlier in the week. But I like how Brazil looks, and I know Brazil is going through, a lot of situations with COVID. But I always trust price, right, rather than the news. Right? I always think price is a leading indicator. So maybe the fact that you could see I've got this trend line drawn, and it's not like Brazil is just breaking hard to the upside, but I do see it kind of fighting out of this consolidation period. And if you move over to the weekly chart, you got support to trade against, 33.66. So again, I'm not an expert on what's going on with COVID in the area, but again, I trust price above news, media, and anything else. Price always knows. So 33.66 will be a level to trade there. Also, another chart that looks particularly good is Mexico. That is also trying to get out of this downtrend that it's been in for a while. Right? If you look at the daily chart, again, that was the weekly chart. This is the daily chart. It's had a really nice move. Vietnam is another one that performed very well. If you haven't looked at this VNM chart in a while, this thing has made a nice run too. So you're getting that global breadth that's starting to really show some signs of life here. VGK, if you haven't looked at Europe in a while, hot. This has been moving quite nicely, right? So again, not just the U.S. markets that have been doing pretty well, but overall, globally. Even though again it's the Chinese internet names, which were very strong last year, they're taking a breather, as are some other areas in the U.S. We know the story with high growth, but there's other areas that are definitely picking up the ball and running with it. And Europe is one of those areas right now. Up another 1.1% today. Again, this is VGK. And there's a few different ETFs that you can look at, but that's one of them. All right, so that's I think that kind of sums it up there. But again, a lot more areas up more than 2% versus down areas. Nigeria, India, Egypt. Those are your leaders to the downside. And look at Germany, by the way, too, up 2.2% for the week. Australia, also we can just kind of jump to a couple of these charts too. But look at Australia breaking out. A lot of material type, areas of this, that are in this particular ETF, material sectors, I should say. All right, guys. So that's the weekly performance. Just to kind of recap, today's price action, tight range for the averages, right? The S&P really didn't move too much from the open. Today was monthly option expiration. There was a little bit of a volatility around the close. That's completely normal for monthly option expiration, and we saw that, right? So, but all in all, not really too much of a move. Bonds kind of interesting for the day. They did give back some of those big gains yesterday, and the VIX was down. The VIX is now down to 16. So just like that, I'll just take a quick look at a VIX chart here. But since this thing it was kind of for a few months stubborn between that 20 to 25 range, and has really started to kind of trend and break this this support, which was right around 20, and all the way down to 16 at this point. So remember where for a while this VIX was going between a 12 and a 15 a year ago, and we're right around that range right now, just a little bit higher than we were. All right, so S&P, right? One of the things that I wanted to mention here was that we are definitely overbought at this time. The RSI is a 75, so we continue. I've been saying this now just about every day this week, so it kind of sounded like a broken record. But I said earlier in the week we're at a 72. We went yesterday to a 74. Now we're a 75. So the RSI is telling us that we're overbought. And you could look at your frame of reference for other times when the S&P has gotten above over 70, right? There's been a couple times back here where we've kind of stayed overbought for a while using this RSI. Here was another time. So I'll let you draw your own conclusions rather than me say what I think. But take a look at these times where we've gotten a bit overbought. It's rare where we just kind of stay very overbought, but who knows? You have to kind of make your own judgments in terms of whether you're comfortable holding risk here as the indices get more and more overbought without any pullback. So I certainly have talked about things that you can do in the trading room this week, and and I have a couple trades in place for that type of strategy. So I'm not going to go too much in detail into that right now. But yeah, here was this was back in September, or going into September, last year. And again, remember this move up that we saw back in starting off basically at the end of June. For 3 months, this one happened. June, July, August, all the way through the end of August, we had this massive move, or massive swing higher. So, it kind of feels a little bit like that at this point, and just be mindful of when we get really overbought like that. So, my other thought that, I went over this in the trading room earlier. We do Q&A, which also includes charts and my thoughts on what the markets are doing. We do that Monday and Wednesday, and then Friday we also do kind of a look ahead. So if you watched that video already, or if you participate in the Q&A, this is a little bit of what we talked about earlier. So you can skip I don't have to watch this. But one of the things, and I I could be wrong here completely, but I'm just going to mention this observation because, I don't have a crystal ball, but I do make note of some of the things that have happened previously. So far in 2021, has it been better to own stocks in the beginning of the month or the end of the month? Well, it's kind of an interesting question, right? So take a look at what's happened in the beginning of the month. So where is January? So January, here's the beginning of the month, right? And let's go to about the 15th, 16th of the month. Again, right around that range, right? Here's the 15th of the month. Here's the 20th of the month. You'll notice there's a little bit of volatility at the end of the month, right? It's particularly like the last week of the month. Okay, so let's move over to February. Well, February, here's the first of the month. This is the 12th of the month, 16th of the month, and notice again the last week of the month, or around the last week of the month, a little bit of volatility, and really we started to kind of move down past that midpoint of the month. Let's move over to March. What happened at the beginning of March? Right, we kind of rallied, had a nice little swing up until 315. Look at what happened at the back end of the month. Right, not all the way. The last couple days of March, the end of March, were actually pretty darn good, right? But we did have a little bit of a move back. So if you take that forward to this month, and again, it's not predictive what I'm doing here, but I'm just saying that there tends to be a little bit of the last 3 months. There tends to be a tiny bit of a pullback. Somewhere in the last 2 weeks of the month. Now, so I guess the question is, do we see that again in April? And we don't know yet, but everything about trading, well, not everything, but a lot of what trading is about is probabilities and risk versus return, right? Do you view this as a riskier time the next couple weeks? Or do you think that the return is skewed in your favor, right? So it's something to think about. I'll just leave that there with you. And because, again, I said this now 3 or 4 times, but I don't have a crystal ball. But I'm making some decisions, right, based on what I see and what I've seen, as we get closer to the well, not closer to the end of the month, but we've now passed the midpoint of the month, right? Today's April 16th. All right, so that's a little bit of food for thought. And now, the other interesting thing is, if I usually tend to pump the brakes a little bit more with adding risk when, I see less and less buying opportunities. When I'm not seeing buying opportunities in single stocks, then I know that, maybe I shouldn't be pushing it there. One thing that I'm continuing to see is opportunities, but in different groups, right? And that's basically what, as we went over the week's performance and kind of summarized, what happened in, say, healthcare this week, very strong, breaking out. Look at what happened with materials this week, has broken out. Industrials have been doing fine, right? They've been gliding higher. Tech, has already kind of broken out a little bit. Consumer discretionary has broken out. So I don't think that there's a ton of areas. Here's home builders, right, which had a monster day today. A lot of these areas are pretty extended. Right? We can look at a couple of the defensive areas, utilities, right? So I don't think that there's that much left, in terms of other sectors. And I know I'm going through some of the broad sectors here. I know that, of course, there's been some other areas that are not participating in the market, even though we have very strong participation, but you're still not seeing really broad participation in things like this. Now, we could argue why it hasn't. My feeling is that last year these things had a big run, right? And we're always seeing market rotations, and it's not just this particular ETF. It's not just, there's, if we go back to the clean energy, right? You can see what clean energy is doing, right? These are areas that had colossal runs last year. So they made this move. Now is the time, that there's been profit taking, right? And the market doesn't appear at this point to want this group of stocks right now. Higher speculative, higher valued, areas of the market. Not again, not. It still depends on the group, right? It depends because there is some demand and definitely in some growth areas of the market, right? If you look at VUG, which is large cap growth. Oh, that's the wrong one. Right? The growth ETF is breaking out. So again, it just kind of it depends which growth, right? Pretty interesting. So it is some particular areas of the market that are just a little bit unloved. Now, what I tried really talking about the last couple days is, well, is it logical to go into some of these areas of the market that haven't participated? And, I think there's a lot of techniques for that, right? I was kind of contrasting a couple different names today. CrowdStrike, for example. What happens is after a whole group gets hit, like growth did, you're gonna see the leaders start to make a move, right? Some of the best names are making moves, right? And some of the weaker names are not, right? And really what I try to look for is confirmation, right? So CrowdStrike, we talked about a trade idea earlier in the room, but look at CrowdStrike above all the short-term moving averages and above top of value. Now, this could still fail, but at least it's doing something a little bit different than, say, a Teladoc, right? Right. This, to me, and again, I don't really care about this range in here. I would be looking for when buyers really start to come back in here, right? So, my philosophy is I don't need to pick the bottom. I don't need to get the absolute bottom in anything. What I want to see is confirmation that we're starting to see people really get interested in this. And some of these names, we're just not seeing that yet. One of my favorites, too, is Zillow, right? It's not ready yet, right? 146 would be the level for this to break higher, right? And I've looked at this multiple times the last couple of weeks, and I missed this little move here. I just wasn't ready to kind of pick the bottom here, but it made a very measured move to the top of value for the month. All right, another one. I was also making a comment about DraftKings today, right? DraftKings came out with some really good news. What happened to it today? They sold it, right? Meaning, so why? Why is this happening? Right? Because there's not appetite yet for this name, right? So there needs to be more time, okay? Right? Because if you look at some other names, Alcoa had earnings, right? Look at the performance of this today, right? So why does this hold the gains? Well, because there's an appetite right now for this, right? And if you scale back or zoom out, right, you could see this is still retracing. Now, we'll see what this does after this VPOC was taken out, because you don't have another one up here, right? So again, for Virgin Point of Controls, take a look at this name today. Sherwin-Williams. Up 3.8% today. Monster move out of this little consolidation. So there's definitely some good looking things. Here's a stock that I added. I didn't really want to add risk today, but look at the nice setup in Darden. To me, this looks like it wants to resolve higher. We'll see. I put on a trade. We'll see how it goes. Not any major huge volume here, but I do like the pattern here, and I know where I'll get out of it, which is 144. If it breaks back into value and doesn't carry through with this relationship, so be it, and you move on. But I think it's got a nice chance here. All right, guys, we will leave it there for the weekend. And I just wanted to remind people too that number one, this year so far has been, as always, I would say very unpredictable. It's probably not what you thought, coming into this year, that all of these rotations were going to take place like this. But I'll tell you, if you could stay objective and not stubborn in this market, I say it all the time, but this is one of the best jobs that I could possibly think of. It is always interesting. Sometimes it's not always fun, but investing, it shouldn't always be, it shouldn't really be fun. It should be a process. But it's very rewarding when you put the work in, and you stick to your process. And if you're a newer trader, the first couple of years that that you're doing this, you really have to get used to defining a process and risk. That's really what it comes down to. Doing the chart studies and scanning and doing all that is a part of it, but really it's how you behave as a risk manager, right? So it begins to get more rewarding once you kind of realize that and develop your own process, right? And also think independently, right? Take information from different areas, pull it together, and make your own decision, right? Instead of following. Okay, guys, I'll leave it there for the weekend. Also, just a reminder: get some exercise in. Perhaps a couple beers too, couple drinks. But yeah, make sure that you relax over the weekend, because you know, we all spend, for if you're trading full time, everybody spends a lot of time in front of screens in a chair, and it's not the most healthy thing to do. So make sure you do get outside and get some exercise in. All right, guys, have a wonderful weekend, and I'll see you on Monday.